Hey guys, so I kind of wanted to make a video on kind of a beginning trading setups, simple ones that work. And I want to start really from the basics with a naked chart. We'll set up some local areas of support and resistance and go over some patterns and time frames and how I decide to get in and out of trades. I'm going to keep this very beginner friendly, and I'm going to treat TradingView like we have the basic free option first, and then we may go into some more advanced indicators later. But I know on the free version of TradingView there aren't a lot of indicators you can run at a time, so we're going to kind of combine the most important ones for me that are available for free. And actually, instead of just activating here, go into my indicators, metrics, and strategies, and one of the ones you want to look up is the moving average ribbon, that one there, and I have it favorited because that is going to give us a lot of moving averages with just one script. And you get this one set up the way I do it. So instead of simple moving averages, I like to use estimated moving averages. So I'm going to change all of these SMAs into EMAs. Instead of the 20, I know a lot of people love the 20 and the 21. I do the 13. I'm going to make that one red just to keep it consistent with my other charts. The 50 is this light blue color. Instead of the 100, I do the 200 and the 800. So I already have the 200. Let me get the 800 in. That's darker blue. And then the 200 for me is white. And that lines up with my Trader's Reality setup that I use. And with this one even, when we come here to the 50, I like to make that one a little bigger. Yeah, that one's probably good right there. Because to me, the 50 is the mean average I'm looking for on the time frame that I'm trading. And I'm looking for mean reversion, and we'll go over that in a little bit. The other indicator I want to pull up on here is volume. And again, you can just put in volume. It's that top one there. Nothing fancy. So I'm going to activate that because it's already activated in there. It puts the volume down here at the bottom. And then my favorite oscillator, and this is the free version one, it's not the fancy one, is the relative strength index. And that should be available as well. I don't know why it has an average line in there, but I want to say that's the right one. No, it's been updated. Maybe that's why. Technicals, indicators. Yeah, okay. Yeah, guys should be able to get that one. That's nice. I got a moving average line with your RSI. Didn't used to be that way, so that's actually an upgrade for you guys who are running free. So this is a good basic indicator setup. I know some people like to use the MACD. If you want another oscillator, you can absolutely use the MACD. That might be another video for another time. I've used it before in the past, but I often find the RSI is plenty fine enough for me. There's plenty of oscillators. I just like to keep it simple. So the next thing we're going to want to do, we're on the hourly chart here, is we want to get the macro trend. Let's say we've never looked at DOT before. I've looked at it a little bit lately, and one of the reasons I have it in this video is because this Polka Dot looks like it's respecting levels and patterns really well. I'm on the Bybit chart because that's where I'll be trading. There's not a lot of history on Bybit. We have 2 monthly levels. This lower one could come into play. And if you guys have seen my other video on levels charting, you'll know what this is. So our monthly level, I'm going to do the lighter purple just because it's a little easier to see. I had been using the darker one, but I don't think it'll matter. So this is our supposed upcoming monthly level of support. We just started a new month. And this may not be valid. Because if we close lower, this won't be a monthly level of support. So I'm going to actually make that a dotted line, just so that we know that it's pending. We'll put one up here too, but that is a confirmed level, so we're going to make that a regular line. And then a lot of times I'll come in and add text to them as well, just to help keeping them organized. Call that monthly. All right. That'll do for that. So let's go into the weekly chart real quick. We're not going to tag all the weekly and daily levels. We're just looking for areas that are relevant to where we are in the chart. When I want to trade this week, it's Tuesday. Tuesday is a great day to start. Tuesday, Wednesday, Thursday, New York session. And that's where we're at right now. See, that's a pending weekly level of resistance right here. I'm going to leave that for now. That's a good one right here. I'm going to leave that pending one for now, and we'll come back to it and see if it's a daily. Because I have a feeling that it might be a daily level of resistance, so I'm not going to mark it yet. Excuse the sniffles, guys. We have another one here. Another one there. Another one here. And just for the sake of brevity, I'm not going to label them all. We know what our color code is. If you don't, just watch the levels video. That'll give you your color code. Those are our weekly levels. And then we pop into our daily. All right. This area up there is a mess. So let's grab a couple of dailies. Yeah, that could turn into a daily. It's not one yet. End of day, if we close lower, and I believe that we will, that will be a daily level of support. So let me tag that. Let's color coded orange for our dailies. And I'm going to make that one a dotted line too because it's still pending as well. And let's grab a few more. So we're kind of looking for on the way down. There's one. Let's change that back to our line. Another good one right here. And we could go a little higher too, but I like this one. So we're going to leave it as is. And in the middle as well. This whole range, though, I feel like we'll get into. When we get into it, I'll probably put that daily there, and we'll trade in this range if we can keep it. We kept that range for a while. If we fall back into it, these levels might apply. Yeah, let me go ahead and mark that one too. I hate to leave them open. So we'll do that one because that one's really well respected. And that gives us a center line for that range. Now we want to grab a few above. That off there. Grab a few above just to get some resistance for the direction we may be heading. Weekly is well respected. I'm going to move that daily up because I believe that's a better line. And then that's well respected. And I think that'll do for right now. I don't think we'll shoot up. If we do, you know, it'll be tough. Yeah, that's a better one right there. So, looking on the daily for the overall trend, now we have a lot of our lines in. We can see we're in this open area here. And what this area means to me is that it is an untested range, relatively speaking. We have a lot of support and resistance and a lot of activity going on above us that we can mark a lot of important levels on. Here, I'm just going to tap that one real quick too because it's also very well respected. So when we go up to that range, we'll have a lot more information to play with in here and even down here than we do in this box. So this box is kind of our frontier. So without any daily or weekly levels, we're going to use some fibs. I'm going to go from our last swing high down to our swing low. And that's going to give us some good fibs. And let's make, I'm going to get rid of this box because we know where we're at. That's not particularly useful. Delete that. And let me grab a new box. This is going to be our zone of resistance. I'm expecting this area here to be a strong area of resistance. And this to, yeah. Yeah, let's do here. This is going to be our first zone of support. I think if we come down here, we'll bounce. If we don't initially bounce and stay in this box, then we'll fall into this range. We'll remove that box and we'll play this range here. This would be our next zone of resistance below. So we've got our range. We've got our fibs on the range. If we are retracing, we can do a quick swing low, swing high. Yeah, that puts our golden pocket right below our support box. So let's just move it down. I feel like this is a better bounce zone. So let me take that off because it's not giving us a whole lot more information that we can keep on the chart. Oh, and if you guys want, you can adjust your settings on your fib levels. Let me go and show you the default. You guys are going to notice that yours look very different. Template, apply defaults. Yours is going to look like this, right? To me, that's a big rainbow mess. Let me go back. I'll show you how I have mine set up. And some people just have it where, well, I deleted the wrong one, but it's actually working pretty well. We'll leave it there. Let me go into the settings. Some people have them set up where you don't see anything but the 618. And then I had to add in, what I did is I selected, what I did was I selected one of these that I'm not using. I deleted it and put 065, and I marked that one as yellow as well. Yeah, this guy here. And all the others are just gray. Because to me, the ones I'm really looking for are the 0.618 and the 0.65. That's the golden pocket. That's the most important of the fib ratios. The other one you can look for that's almost of equal importance is here. It's the 0.382. I know there's others when you're setting targets for Elliott wave. That's why I still have mine set to where you can see them other than the golden pocket, but I don't want them to be too distracting. I like to depend on my daily and weekly levels more. We don't have a lot, like I said, in this box, so we're going to have to stick with fibs for now. Let's move in to the 4-hour chart and see what we have. So you can see here we hit the 200 on the 4-hour, came back down, caught support on the 1300 moving average, the 13 moving average, came back up. We're finding good support on this 236 fib. We went all the way up here to our, I mean, obviously that's going to be our 0 fib because we measured from low to high. And this high came in there. So that's our turning point. It's our swing failure. If we move this fib to a swing high to swing low, let's see if that helped us any. Our support and resistance levels. Yeah, we broke over the 0.5 fib. Didn't quite come up to the golden pocket up here. But I feel like the moving averages are really running the show right now. So let me move my fib back to low to high, because I feel like we're going to come back down and hit this area, this box of support. I could be wrong. We might catch support here on the 50 moving average instead. If that's the case, let me mark that 50. This is the 4 hour. It won't move a whole lot, but I can always move this line. Let me do the horizontal ray. You get right on that 50, pop it in there, change it to match the color. And our resistance above is going to be this 200 moving average. Try that white. Oop, I need to anchor that. Get it right on again. Put the anchor, that way when I'm moving around in here, I'm not moving that at all. I don't want it to get misplaced while I'm trying to trade. So we're looking for volume increases too, and we're getting it. You can see the New York session started earlier today on a Tuesday. It's not going to show me that candle, is it? No. Well, my brush. It's right here. It's the New York Open. This one here was the Brinks Open. So we're getting volume increase, price decrease. So that's not a divergence. RSI is decreasing. That's not a divergence. We are leaving the high term frame. We have plenty of room to come down for a cool off. So I'm not looking for any massive retracement right now. What it looks like we're forming, if you guys know patterns, kind of the traditional pattern is a head, and we may come up, hit the 200, come back down, call that a head and shoulders. Those aren't the patterns I necessarily trade myself. I like to divide them into two different types of patterns. And the first one, for me, we'll talk about this overall pattern that always shows up. Let me move out of this range really quick. Delete that. Let's move over here real fast for just a second. I'm going to show you this pattern that shows up. Oh, drop my pen. All right. You know what? Let me use the arrow tool. Sorry if I'm being a little perfectionist here. All right. So you get a rise, a retrace, rise, retrace, rise, retrace, rise, swing failure, retrace. Oh, sorry, drop, retrace, drop, retrace, drop, swing failure, double bottom, and it just continues, right? It comes right back to here. Let me take that out of here. So out of that larger repeating pattern, we get two patterns that we can play. We get a rise, retrace, rise. That's a continuation up. We have drop, retrace, drop. That's our continuation pattern down. And my favorite to play is the M. Keep doing that. Swing failure M. And swing failure W. And I like to play those because that gives me the best entry point for this, and for this, if I'm playing continuation. So where you want to play these the most, right? Your best bet, if you're looking on the hourly, and you're looking at a pattern like this, you see a drop after 3 rises, say it already did that, and you got your third rise, you're going to zoom in and you're going to look for an M on the 5 or the 15 up here. That's going to show you your first drop. It'll form a little W. That'll be your rise. Form another M. And that is where you really want to go in. Okay, so if you get in here, you get this drop, you see the W form, maybe you take a little profit there, rises up, forms another M, you can take the profit you took here, put it back into your short, run it down, forms a W, take another profit, write it up, forms an M, put it back in, write it down. And all the while moving, take profit here, move your stop loss. Get in here, come down, move your stop loss. Come back, get in again here, it moves down, move your stop loss. And then you're on 1, 2, 3, retrace. If you didn't get out here, you'll definitely want to get out here and look to enter long again as it comes back up. That is essentially my pattern trading strategy. That's how I do almost all of my patterns. And where these lines of support and resistance come in, and where the EMAs come in, is in giving me an idea of where this retrace is going to go. So if this is the 50 EMA, and it's kind of estimated moving like that, when we come down and we hit it and we bounce to form that W up, I know that that's going to be our first point of resistance when we hit an M here. We can come down here, and I may be wary of this, because if we don't break it, it's going to come back up. And this was all part of a continuation wave. It wasn't a reversal at all, right? I was wrong on my entry. And if it comes back up, I need to know so I can get out without it even hitting my stop loss. And if it retraces more than 50%, I'll generally come out because my entries are in here. If it retraces 50% up, if it looks like it's just going to keep going, I can get out. Looks like it curls back over, say it gets 3 tops instead of 2, and it's kind of a messy M, then I can always get back in again and hopefully come down, break that 50 EMA, and hit a new low, in which case it's going to come up. I'm going to expect that 50 to act as resistance and watch it come back down. And I'm always looking for the smaller patterns within the big patterns to make my entries. I can bleed a 1 or 5 minute trade into a 15 or 1 hour trade. And you can continue to go like that too, as long as it goes your direction. You just want to keep making sure you take profits and protect profits, especially if you're putting money back in. I don't like riding stops, hoping that it's going to turn around. You might as well get out early and then look for another entry. Because money that you're losing in a trade, even if you haven't taken the loss, is still money that you're down. I mean, you can't liquidate your trade without it being in a loss if you're riding your stop loss up. So that money might as well be gone. Anybody who tried to trade XRP this weekend, myself included, because I broke my own rule of no weekend trading, found that out very much the hard way. And it was a swing XRP swing XRP short, and I had a very generous stop loss, and it rammed right through it. In a move I haven't seen from XRP in a very long time, which just reiterated the fact to me that I should have waited for my short entry until today, Tuesday, Wednesday, Thursday. And if you're doing longer term trades or you're setting up swings, Tuesday, Wednesday, Thursday, it's all I'm going to say. New York session especially. If you're doing intraday, any market session during the week is usually pretty good. Be a little wary again of Mondays and Fridays because Mondays they set up the move the rest of the week, so you get a good false move on a Monday, and then Fridays are full of shenanigans, especially while the market closes, because everyone's taking their profits out of the market on Friday for the weekend. The big institutions and the big pro traders, they don't work the weekend. They're not going to play on the weekend, so they take their money and they leave. And weekends are fraught with whales and shrimps and sharks or whatever you want to call them playing around and splashing in the price. So, over what we talked about, how does that apply to what we're seeing in the chart right now with Polka Dot? Just to get back on track. So we saw get that out. We're on the 4 hours. So we had drop, rise, formed a W, came down, formed another W. So you didn't break 50%. We could have taken profit up here if we wanted when it hit this EMA, the 50 EMA. Maybe it came down, and if we'd taken profit and moved our stop loss, say from where we decided it was going to enter here, move it up, maybe we got stopped out. We saw it form another W, right? So we take that trade, comes up, hits the 50 again, we know to take some profit out. Forms this little M pattern. That's our indication it's time to go, right? Because that's a reversal pattern. So our long would be out. Maybe we enter a short, come down. We wouldn't have this fib line here. We'd have something else. Comes back up. Actually, you can kind of see we formed this triple bottom now. And now we've got a bigger W. So we've got a bigger play. Comes up. We're going to be careful here. We blow right through it. Blow right through our daily, come back, test it a while, comes back up again, and if we zoom in this part right here, I guarantee you there's going to be an M pattern in there somewhere. So we take some of this mess off that I'm drawing on. Wow, I scribbled a lot, I'm sorry. So if we drop into the 1 hour, right? Because we're now looking on the smaller time frame. There it is, right there. And you can see, clear as day, what we just talked about. There's that M pattern, right? So we failed to we got continuation, drop, it failed continuation, came down, didn't break our low, so it didn't form an M, came back up. So this was all part of a single continuation wave, right? So if we'd entered our continuation anywhere in here and had our stop loss below that line, we'd have been safe to ride that long up here. In which case, which honestly we should have started here, we formed that little continuation wave here. That would have been a much better long entry. But say you missed that and you came in up here instead. You'd have ridden this long up here, would have dropped. You'd be expecting more continuation stops at the top line. Perfect M's, textbook M. I'm impressed with Polka Dot for how well it makes patterns. Almost as good as Ethereum does. And I like to trade Ethereum too, but Polka Dot gets a good amount of momentum and trades sideways a lot, which not necessarily crabbing sideways where it's not moving a whole lot. You get decent percentage movements. This is an hourly chart. Let me show you a measurement of the top of that M, right? If we saw a swing failure, and I'll say we didn't trade the entire top, and we didn't get the entire bottom. So we're not looking to get the very top and the very bottom. You want it to start moving your direction. So we have our center line here. If we traded from the break of that center line down to, let's see, say even if we just went down here, if we saw it turn around, it came back up. Even there, that's, and this is the hourly chart. 2 to 3 hours, that's 4%. And if you're trading at 10x leverage, which in that chart time frame is a good amount of leverage, that's 40%. It's a 40% gain. And that's just taking the middle out of that trade. So, yeah, that works great. And you can see where we're respecting these moving averages. These are great areas to watch. You see it come up a little bit, but it hasn't come back over, right, the 13. Stopped at the 50, didn't quite reach the 13, came back down, broke the 50, stopped at the 200, broke the 200, stopped on our daily level of support, and that's where it turned around and broke above the 200. That would have been a good take profit, or at least a partial, and you'd have moved your stop loss at entry. It never got hit on the way back up. Instead, we just rolled back down. And as we're catching support in the middle of this band, you could have your next take profit again, maybe exit the trade here. Never reached that. Came down to the bottom to our another daily. And that is where we could either taken another profit or completely exited the trade. What would have exited the trade 100% for me was, look, we have this, and it comes up, breaks the center line, and then we have this kind of triple W, really good W there. And we caught support, and at that point, it looks like we're gonna curl over this EMA. I'd have exited the trade there because that looks to me like it's flipping bullish. You could have exited your short, entered a long, and rode that up. All of these trades, you could be in and out within a few hours. So those are good intraday trades with good intraday levels of percentage gain, especially if you're trading with 10x. I want to go back in the chart to where we're really in kind of some good sideways action, because this is great pattern play right here, especially for continuations and reversals. But I want to go over a good levels play. So let's go back through our history. Yeah, while we were in here. Now, if you want to get a little fancier, and you go anything above the free version of TradingView, cash flow, we want volume profile. Fixed range volume profile is a fantastic tool for levels. You could run it back across this entire range. And let me adjust my settings on this because it's set up for the way I like it. Normally it doesn't do this. Developing POC, developing value areas. Let me turn those off. And inputs, row size I think is default around 40. I put mine up to 100 for a little more precision. That's up to you. I like it around 100. You could do even higher number, and it'll make these lines. Let me show you what I mean. So that's 40, and you see the lines. That's default, I think. Just a little fatter. And that's fine. I'll just leave them there for now. But what we would do is we'd come in with our horizontal, and we would mark right there. This is our value area low, where the market blue, see where the color starts to come off, the brightness comes off there. That's our value area low. This is our value area high. What that means is that when we leave these ranges, volume drops off significantly. And that puts a lot of pressure to fall back into our value area channel, which is encapsulated by these two blue lines. And then our point of control is the middle line. It's where the volume is its greatest. When the price reaches this area, volume increases the most. So what you really want to do, sorry, give me just a second. Let my dog outside. Sorry about the interruption. All right. Yeah, so if you have this, you can use these as other levels of support and resistance. I'm going to take off. I need to take off this fib. There, he's just kind of mucking up my works now. All right, so yeah, that's our range. Now, where we'd really want to trade, let me take this off now that we've marked our, well, let me mark this last point of control. Make that red. Get rid of that guy. The 1 hour. Let's really do a little scalping here. Go into the 15-minute chart. There we are. Okay, so what I would do in this range is I would have a bottom box area, and I'm going to mark off this upper range, and this is the range I'd play. So here we go. So we go sideways for a while here, and I love it when we get caught into a range like this with a good amount of percentage distance between the top of the range and kind of our bottom, our average movement price movement. Right like that. It's probably about 20%. Those are some really good numbers. That's 200% moves all day long. Well, not all day, every couple of days. That's really good. So we're going to play our same patterns, but we're going to have these areas where we expect price to move away from when they get into them. That gives us really good take profit zones in areas of turnaround and resistance. And when price moves into these boxes, what we're going to look for, we just be establishing here, really going to look for that reversal pattern, right? So on the 15, we're starting to get it there, and we're coming down, right? We have 3 drops right here. We had a little M at the top. We'd have to zoom in and see it. We got our 3 drops, and then it's going to turn around, right? So we know these areas are areas to look out for on our weekly support lines that we can take profit and expect maybe retraces, zoom in here, see if there's an M for another continuation, see if there's a W for a reversal. We went into our box again. We're looking for a rejection of the box to enter another short. This one didn't last long. It probably would have stopped us out. But hey, that's one stop out because look, we come way down now. Comes back up. We know to look for resistance, swing failure. We can ride this sucker all the way down here to our value area low. Definitely take some profit there. Never entered the box, but it bounced off our value area low and continued on. Let's say you measure. Let's say you entered a trade up here. You saw an M forming, came down, out of the box, into the box. If you didn't get stopped out at the top, up here, that was a pretty good size move, Nothing spectacular, but not bad. We came up here. This probably would have been the good entry. You made a little money on this one, but you'll notice as we came up here, tested it again, you probably broke even on this one because you could have taken a little profit there. Could have broken even on this one, come up, initiated another short. So we're going to measure not quite the top. Let's say you initiate a little late. And you bail on your trade down here at the value area low. 13%, 10x that, it's 130% gain. If you're taking profits on the way down, let's say it's a 70-80% gain, Still not bad. And I do like taking profits. Either control your stop losses to the point where they're chasing price so that if it moves, you get stopped out in a profit, or take profits. Always pay yourself, because if you don't, it'll turn on you and you end up with no money. I like to keep my stop losses conservative, so that works for me. Now here is a tricky one. Let's move in a little bit. Well, actually, I can just zoom in on this one. It's pretty good on the 15-minute chart. All right, because they can trick you out sometimes. This one probably would have got me right here. Okay, let me a little more precision. So we came up, retrace, we're coming out of our box. We're rejecting the 50 EMA. We're coming out of our box. So we're coming up. This would be a good entry area here. Yeah, right here as we cross over our value box. We hit our value area low. Come back for test. That would have been the oh my goodness, is it going to make it moment. And then we get a rejection off of our daily support. Come back up, right? And we're breaking a weekly, and our point of control. Either of these two would have been a great partial take profit. We come down and we're like, okay, it's coming back up, break back over the 50, back up to the weekly, rejection. It looks like we're just going to keep heading up. Here, right, we come very close to making that M. That would have been an area where I'd had a finger on the trigger. If we came down to the 200 especially and started to break under it, I'd have exited a trade here, because you see we almost broke the neckline of what would have been a reversal. That one didn't quite get us though. But then we come up here almost to the top of our value box, and that would have been a great final take profit zone. It just didn't happen, right? Just teases you. Comes down, catches support on the 50, makes another run for the box, and you're hoping it's going to hit your final take profit. Doesn't quite make it. Comes down here, right? And now what did we do? We broke the neckline of an M formation. We would probably have gotten out there, maybe even initiated a short. It would have come up here and tested like this here, right? Your stop loss on this is either going to be the 50 EMA, which is about halfway through, maybe just above it, which would be halfway through our M formation, or just above, because you want to, take count for wicks, maybe up here just above that weekly support line. And we came up. If your stop loss was at the 50, you're out of this M, this short, you're already out. If it was above the weekly, or even at the tip of the M pattern, your stop loss is safe. We come down, right? It looks like it's going your way. And then up it goes. So that one here, this M, in all honesty, that one would have got me. But if I entered here at the break, it came up and stopped me out here, very minor loss. Stopped me out here, not so bad. If we went all the way over here and it came out and stopped me out, then I'd be a little more upset. But here's how we avoid this, is that when we entered the trade on the 15, if we're gauging it on the 15-minute chart, we have 2 candle closes for this trade to want to go my direction, or I'm bailing. I got 30 minutes. If this was our entry, right, at the break, 1, 2, it just keeps going up, right? It's been 30 minutes and I'm out. If I entered it here on the hourly, let me see if this shows up on the hourly. How many hourly candle closes are we at? Yeah, it's an M on the hourly too. So even if I entered it here on the hourly, pull my pen back out. Right, I got 2 candle closes. 1, 2. No, it's still going up. I'm out. Right? So I wouldn't have ridden that whole mess fretting about my trade all day. Bad entry, look for another one. you know, maybe here when it came back down, you'd try it again. 1, 2, nothing. Get out. And at this point, it's starting to form W's instead. So then what have you got? You've got a long entry. Comes down, doesn't break your resistance. You should have your stop loss just below. And yeah, 1, 2, you might have even gotten out there. Played this W instead, right? Because you're always looking for an entry that's going to go your way. Comes up, flattens out, but it's still in the money, still in profit. You just stayed in that one. Maybe paid yourself. Who cares? You know, you're making money. If you're in a profit, you're in a profit. You know, take your money and go, because if you don't take it, someone else will. And if you did stay in, you know, would have come out of your box up here. That's probably where I've gotten out, is out of that value box, at least most of the way. Maybe see if just, you know, if it tests here and wants to continue on. I don't know if I'd have taken this or not. Maybe if I saw the M pattern here, if I was watching it, maybe not. If it was the end of the day and I was going to bed and I had a sizable portion, I'd get out, call it a night, and sleep well, you know? Because it's not worth fretting over a trade, especially if it's nominal at that point. Because I would have taken a lot of profit out before it got there. I know on the 15-minute chart for smaller trades within that channel that aren't going to rise to the very top and the bottom, like if your time frame's pretty small and you're just making little trades within the support levels, then you're probably using higher leverage than 10x. And that's where the tight stop losses really come into play. Leverage is dangerous, but it's also a tool. And if you don't want to use it, you don't have to. You can always trade with 1 or 2x, especially if you're shorting. If you're 1x shorting, I mean, you're just trading the value of the short. You're not multiplying it at all. So your stop loss is going to be huge and exponential. If you're longing, you might as well not even long. You just, you know, buy at spot, trade at spot. And you're just trading the value. And you can do that pretty well with altcoins. Altcoins move enough. Like we were in that range. We were moving, what were we saying, the top and the bottom of the range was 20%. If you're making 20% in a couple of days, you don't need to multiply it by leverage if you've got a sizable spot account. And you're not worried about stopping out. But, yeah, if you're trading small amounts, say $100, you know, and I'm not saying you should trade $100. I really think Roy's right about trading $10 to start with. Trade $10, multiply it by whatever leverage the leverage is, and trade a portion of it. And then you'll see how much leverage you might need to beat the fees over what time frame or time period that you're trading. And until you really get good at it. So I'm going to wrap this up. This was with just some free indicators. Oh, let me go over some of the indicators. We didn't really talk about them when trading. And for me, they're just for confluence. I don't look at the indicators much for trades, other than I will say on the 15-minute, this area right here is a good example of why it's good to have an RSI. And this pump, right, you can see the volume increasing. The volume increase is good, but then volume drops off. And our RSI is outside of this upper band, and it's trading over that average. To me, that is way overbought. So I am looking and waiting for reversal patterns to show. And when they do, I'm going to short and let it ride down. It rides down the EMA there. And look, right, we come down, hit that 200 support. By the time we hit the 200, the moving average is fine again. The volume is low. No, actually, volume's piking back up. So volume's picking up, which means it's fighting the drop. It's fighting it's running the drop, catches support with a volume spike like that. Then it's going to fight its way back up, and it did. Did we form a bigger M, or did we form continuation? We formed, it looks like continuation. I don't know what happened in this chart. So let's find out. Oh yeah, it was definitely continuation. This was the last leg, it looks like, of continuation. And I want to say, yeah, after we broke that 200, that looks like a down. That looks like more than a corrective move, but hasn't broken our previous low yet. So we could have one more leg of continuation from here. Let me check the chart and see what I think it's telling me. I don't know. That looks like a third wave to me. See, 1, 2, right? Because we have lower. 3. I'm thinking maybe another bounce and we turn back over for a while. Or it might just be a small correction like an ABC and move on. But we're in the middle of our range and we haven't established a whole lot of support and resistance. I don't have my fibs up anymore. So I'm a little blind right now other than my EMAs. My next level, yeah. So we're on the 15-minute chart, and you can look and see where these EMAs are a little different on the 15-minute chart. They're in a slightly different area. It's not that big of a difference. An EMA is really more of a range than a hard target, on the dot type target. Like that's our range. On the 15-minute, that's the 800. I want to say on the 4-hour, that was our. Yeah, the 4-hour, that was our 50. And then the 13, which never lines up 100%, on the 4-hour up here is our 200. So these would be the areas of support and resistance, kind of in that range that I'm looking at. All right. I know that doesn't give a lot on the oscillators, but that should help. Again, for the RSI, you're really looking for the time frame in which you're overbought or oversold. And you can see the patterns forming in the RSI too. Let me, I'll just make it larger. Right, you can see that in the continuation waves. And you can use that, right, rise, M pattern. I'm expecting the RSI to do something similar. When it comes back down here, it'll be time to start looking at a trend reversal pattern. You want to look for your W's down here and your overall M's up here for your overall trend patterns. This is the 4-hour RSI, so these would be longer term trades, probably over the next couple of days. Come down or come back up. So that takes that into account. And yes, large spikes in volume. We use PVSRA candles in a lot of our charts. Those are the bright green and the bright red, the pink and the blue candles. Those are vector candles. They indicate pools of liquidity when we move too fast through an area, and you can tell where those are with these spiky volume candles. There is one here, there is one here, and you can identify them yourself when you see those spikes in volume. Mark those candles because those are vector candles. I'm going to turn them on real quick. Right, and they leave these, they're gray zones right now, but those gray areas are vector zones where those candles will come back. And you can see right here, right, we have that spike in volume. And that did indeed leave a red vector candle right above it here. And that vector came back and got absorbed when we rose back up. Left a green one here, you see that gray zone, will probably come down, take that vector, might even come down, take this one, might come down and take that one. But we have a lot more above, too, that we left on the way down. The higher the time frame, the stronger the draw, but the longer it takes to get there. Daily is usually really good at covering its vectors. They love the daily. So we've got a lot above that we're going to end up coming back to. And we will. I'm fairly positive end up coming back to these areas. The other thing to look for are wicks. Wicks draw price. We don't have a lot of daily wicks, actually. Got a little one up here. And we have these wicks down here. I will probably come back to those wicks. Look at December, right? So in December, we had this wick here that came down, started to pop back up. Polka Dot didn't leave it fast. It came down, recovered that wick quickly, and then moved up. It actually went against the trend of a lot of the other tokens in that regard. That was nice. But yeah, this applies to any one that you're trading, any token that you're trading. I'm trading on Bybit, so I got the Bybit chart up. Bybit does really good reporting, so even if you're scalping in the 5-minute, the chart looks good. It looks smooth and fluid, and that's not the case with a lot of charts. So you pull up Coinbase or Bitfinex, sometimes on certain tokens, their 5 minutes look terrible. In a lot of exchanges, the 1 minute looks really disjointed and untradeable. But yeah, if you're doing some really tight frame scalping on the 1 minute chart, Bybit's your place. I'm telling you, their charts are really quite good. There's not a lot of history on them. So if you're doing a long-term Wyckoff chart, or you want to do some longer-term arcs and resistance, or Elliott wave, then you probably want to go to a chart with a lot more history on it. All right, I think that's going to do it for today. I don't want to get it too complicated, too long, and too overdrawn. If you have any questions, just let me know in chat, and we'll go over things. And if I'm free, sometimes you'll see me pop that I'm available to just go into the live stream for open discussion. Hit me up, and I'll hop on, and we'll look at charts together, and we'll take it from there. Have an excellent rest of the day. Good luck. Happy trading. See y'all later.